So Bill Holdings reported their earnings on Friday, and as you can see from the daily chart, the price gapped hugely down and closed at the lows of the day, which is very bearish. Also, price is now below the key 200-day moving average. All in all, price fell $34 or 36% as Q3 guidance disappointed. Now we're going to do a top-down multi-time frame analysis, and this is the monthly chart, and we're going to put monthly buyers at this $50 level, and I'm going to explain why I denoted that level as monthly buyers in 1 second. Okay, so let's zoom on in. We have a drop in price. We do have a couple of basing candles, and then we have the rally out. We have one ERC candle, extended range candle, followed by another extended range candle. And so typically when your zone is, or your price action is 2x your zone at a minimum, that makes a level, a good level of interest. Now before we continue with the analysis, going down to the weekly and the daily, let's actually look into the news. So Bill Holdings, or Bill.com, tumbled on Friday after the financial operations platform provider issued weaker than expected guidance for the third quarter. Revenue came in at $363 million, slightly above the consensus estimate of $359 million. That was up for 14% year over year. Core revenue, consistent of subscription and transition fees, increased 16% year over year. Now, despite strong Q2 performance, Bill Holdings, or Bill.com's outlook for the quarter fell short of expectations. The company forecasts Q3 EPS between 35 and 38 cents, while analysts were looking for 34 cents. However, projected Q3 revenue of 353 to 357 million came in below the 360 million consensus, signaling a slowdown in growth. Now, Mizuho, who's a Wall Street analyst, said the negative stock reaction comes as a result of disappointed investors who had bullish expectations heading into the print. However, they say they remain on the sidelines given Bill's current investment cycle and look for consistent execution and path to top line reacceleration towards that 20% target. And on top of that, they lowered their price target to $70 from $75. Now, price currently at 62. 70 is only in the middle of this huge move down, so nothing to brag about. All right, so we're going to go down to the daily chart, and this is the level that I was looking at on the monthly chart, that one extended range green candle, and we're going to say that is weekly buyers at $56. And typically, whenever you have a level on top of a level, that makes for a great opportunity to either go long or go short. In this case, you would be going long. You do have another level of a drop, basing candle rally, but not a huge volume. Let's go down to the daily chart. And again, we've seen that explosive move higher on the monthly, the weekly, and now the daily. This is a gap higher. Now, the only thing I don't like about this is the volume. It's subdued. It's below average. So what you want to do is you want to wait for price to come into the zones and prove to you that price wants to go higher in the form of a W pattern. Yes, you can take out the initial low, but But as long as you see price take out the apex, that would be an opportunity to get long and confirm that the bottom is in. Thanks for watching. Subscribe. Please like the video.